What's going on, guys? 360 Digital Closing Bell here. We are live on YouTube from an undisclosed location here in Denver, Colorado. As always, I am your humble correspondent, Michael Tanner, joined, as always, by the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today, my man?
I'm doing fantastic, Michael. It is Friday, and I believe you have a hall pass to hand out.
We are about ready to let everybody finish up their day, but before we do that, you must subscribe to this podcast, 360 Digital Closing Bell, iTunes, Spotify, or YouTube, the best way to stay up to date on all of your energy market news. When we look at the market today, stocks sort of extended their big loss, not big losses, but losses for the second straight day. Tech stocks were the only thing that finished slightly ahead, basically finishing flat. SPY was down 0.5 percentage points to 30.97. Tech stocks, as I mentioned, NASDAQ finishing just 8 points above 10,000, or basically flat, about a 3-point drop. Dow Jones was the biggest downside mover on the day, 25,879. That's a 200-point drop to the downside. Crude oil is our big winner on the day, 39.58, all the way up to 44.45 over 40.45 over that night session early into that tradings day at about 9 a.m. here Mountain Standard Time. So that's a 1.3% increase for crude oil. Good. And finishes off a really good week. Back into the curve for crude oil, 40.47. It's only a 0.3 percentage point increase. Natural gas having a pretty decent day, $1.67, up 2.8 percentage points. Back into the curve, though, for natural gas. Did not do well, got hammered. Half a percentage point drop down to $2.79. XOP, which is our E&P securities contract, $56.08. That's a 2.7% move to the downside. OIH 128.51 as always. That's our Oilfield Services contract, 2.2 percentage points on the downside. As remember, XOP was down 2.7 percentage points. So the majority of our indices are going to be in the red. And that's what we see when we look at our biggest losers. High Point Resources down to 34 cents, 11.34 percentage points in the downside. Gulfport Energy Corporation down to $1.40, 12.81 percentage points. And our biggest loser on the day, Epsilon Energy Limited, $2.85, down 13.9 percentage points. On the upside, though, some good numbers. Contango Oil and Gas, ticker symbol MCF. Gotta love that ticker symbol. 3.39 percentage points. They better be drilling natural gas before it gives a hole in there. I mean, they better be drill that natural gas, or I'm going to be flagrantly disappointed. That's a 6.2 percentage point increase. Tensico up to 62 cents, 6.95 percentage point increase. And New Concept Energy, the biggest mover on the 1.33 percentage points, up to 726. Just slightly in the after hours, right before we close this out, Goodrich Petroleum was our biggest mover on the day, but after hour trading sort of brings it down only to about 4.3 percentage point increase. But we have a great interview with an awesome person from Goodrich. Can you tell us about that, Stu?
Oh, you bet. We get to visit with Rob. He is the CEO and president of Goodrich Petroleum.
Mm-hmm.
Outstanding interview. You had some hedge info and everything turned out great.
It was awesome. You absolutely crushed the interview, and I'm excited to see that. Stu, what's going on in the international news desk today?
Oh, hey, in the international, we are just laughing about the U.S. sanctions. Mexican got slapped with some heavy individuals on Venezuelan oil trade. They're still trying to sneak it out to China. Also, we have in India, you and I had a fantastic interview with Alex Epstein.
Yep.
India's leadership is opening private investment to open up 41 coal mines. And some people might get a little grumpy about that, but I applaud Indian leadership for trying to get power to the people, getting electricity, get them out of poverty.
You phrased it exactly right. Power to the people. A couple things that dropped on my news desk this morning in terms of U.S. shale. Rig counts come out on Fridays. U.S. rig count decreased 13 rigs all the way down to 266. But the craziest number, 17 total rigs going in Canada. So just an unbelievable number. Continental came out today and announced that they're going to continue to curtail 50% of their projected oil output for the foreseeable future. Remember, in May, they came out and said they were going to do 70%. So they're going to turn back online about 20% of the production that they've turned off. But that is a really, really good thing to see, especially if you're looking, because they are a heavy Bakken player. So as we mentioned yesterday on the show, Bakken is getting hit much harder. So good to see them turning on some production. Hopefully that means they start hiring a couple people. We put North Dakota back to work. two other things that I think are interesting that dropped across my desk. This is, again, why you need to be on Twitter, specifically following ETF. First, again, if you followed the show this week, we've been pounding bankruptcies. That has been the theme of the week. Well, we had another one bites the dust last night. Chisholm Holt Oil and Gas, who's a stack-focused E&P with just an absolutely terrible RBL spreadsheet, just accidentally hammered. They had debt of $394 million. It's a private company, so the numbers are a little, we're just seeing the numbers from Twitter here. But the rumor was $390 million worth of debt at a company valued maybe at $65 million. So clearly they were clearly they were on the brink of something. But the other thing that's very interesting, and if you've been following, and if you follow energy finance or people who are in sort of the finance side of the operations, they are loving $40. They are hating $35. Remember, Scott Sheffield came out on CNBC. It was about 2 weeks ago and talked about $40 sort of being that magic number. And this tweet from a stripper operator is exactly why. And I'll just read it for you and we'll sort of work through it. You can follow this guy at Impetro9, IMPETRO9 on Twitter. Update from a stripper operator. Bank called and pushed back my redetermination by 90 days. Talk about price sensitivities they've been running on my portfolio. At NYMEX 35, I am breaking covenants, and at 40, I am only 66% drawn, walking the fall line. So Scott Sheffield said it right. $40 is a chance for people to balance their books, because that's exactly what happened. On all of these loans and credit lines that you have, the higher oil is, the more credit a bank's going to give to you, because it becomes a more net profitable industry. But at $35 oil, there's not much profitability. But even at $40 oil, these price sensitivity models that these banks are running still give you 33% extra cash flow. So this is why we love to see oil at least sit into that $34 mark, and we really don't want it to see it drop below 35. I don't think we're going to see it below 35, but that kind of gives you an idea of the price sensitivities between that. I'm smacking my mic all around here. That means I'm fired up. Are we missing anything this week? This is a crazy week, Stu.
No, I'm just ready to hand out the hall pass and get on the weekend.
Let's get them on out of here. So with that, we're going to go ahead and let you guys get back to work. Thank you for checking out the 360 Digital Closing Bell. You can go and finish up and start your Father's Day weekend. We will see you on Monday for our Week Ahead podcast, and in the afternoon for the Digital Ticker.